The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the January 6th edition. My pleasure to be here Monday through Friday, 11 o'clock till noon. 877-927-6648 is the number to call. And, of course, that's market days. And today being a market day, is this interesting? I've been warning my subscribers to my opening calls, my daily newsletter, that we are getting real close to some kind of a top, possibly a top of some significance. Well, I spent... This is actually the first time that I've been able to do it in months. I've spent over the past week, from last weekend through this past week, into this past weekend, hours and hours and hours and hours and hours of doing charts. One of the reasons is I'm still having some problem. I should have it repaired today. I hope to have it today with my charting service. Just there's a particular problem. I think it's mostly conducive to my particular platform, the way I have it set up, that is, that I lose many charts. They're there. It's just that it goes, when it shuts down suddenly, which it does periodically, I lose a bunch of charts. I never know which or where or how, and then I have literally hundreds, if not more, to do. Charts that I just showed last week could have disappeared. So I'm hoping to get that all organized. Most importantly is, I actually don't mind. It's just a waste of time, of course, but in a sense, I really don't mind redoing these charts because it's so fascinating to redo them and find that you've got, when you go back to the old ones, when they suddenly pop up again, that in fact you did it exactly the same way over and over and over, because that's the way a methodology is supposed to work. That's number one. Number two is, it kind of refreshes you. Well, what I did is, not only did I go through, I had a really nice email from one of our Tigers talking about a Forbes magazine article on the 10 best and the 10 worst biotechs, and how in just the space of less than a week, some of them had huge gains. And he said, is that viable? Is that, well, the fact is they did it. But I checked them out. I checked out the entire list of the IBB, that's the NASDAQ biotech sector, as well as the BBHs, the SPY, as well as the, what was it again? STK. Is that the STK? I wrote it down here because I'd forgotten about it. All right, well, there was another one. I've got it down here somewhere. God, I wrote so many notes. Oh, it's on the little piece of... I try to put it into a little piece of paper because, I'll never find that paper. And when I do find it, I say, what is this? Anyway, I did a lot of work, and believe me, those biotechs are vulnerable, really, really vulnerable. So, we're getting ourselves set up in my opening call. We'll be dealing with all this. I went through bank stocks. There's still some bank stock. We got a bank stock today that's doing still beautifully, just fantastically since we bought it. And others. We did take profits in our sprint position at a very nice gain. It was almost 50%, about a 40% gain. We had some real nice gains recently. So we're taking those gains. There's going to be a loss, I'm sure, in one of our stocks, and that's GE. We bought it, made a little money, and I decided I'd give it another try. I didn't want to be out of GE when my thinking is that GE will still have a very good year in 2014. But the more I thought about it, the more I said, I don't know, I'm just going to tighten that stuff for a very small loss, which we haven't taken yet, but I'm sure it'll be hit today. I'm not that impressed at this particular point with the GE. Some other stocks doing very nicely. Now, I did put down in number 21 the bullet points in my Traders Corner. These are not necessarily all the positions that we have, but they're positions that we're either watching closely, we might have positions in them, or every single day I will give the parameters that I'm looking for in the diamonds, the Qs, the TLT, whatever I think is very important, where we might not even have a position in it. It doesn't matter. And we are quite prepared to go short today, and we will do that if certain parameters are hit. Now, the other thing is this other GLD I always do. Now, what is really important to me is right there, number 21. I had a list of about 15, maybe 18. Well, let me see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26. Funny how 26, you just do so much stuff that you don't even remember how much you've done. Stocks that I looked at in great detail, from Costco to Alexion to just a slew from every category, looking at the SMN, looking at so many of the alternate counter trend 200 or 300% short positions, and but I took it out and I just left here. Number 21 says ALXN, lots of round numbers. That's just a heads up that thing is going to come down. And DDD, which was at the time when I wrote it, was up 5 points or something, and that's the 3D systems. I said leg F daily, leg F weekly, didn't have room, but it actually is leg E weekly. Look at these stocks. Just have a look at them. Here is ALXN. Down $3.50. Would I have got it today? Because I would have given it just a little bit of room on the upside. It closed at 131.72. I probably would have said about at 132 or higher. What was the high? 132 round number high. So many round numbers. I have to tell you something. This is the first time that I'm really cautious about what's going on here. Raising the stops in our long positions, just watching this very closely. And let's have a look at DDD, because we had a fantastic gain in DDD a couple of months ago. There it is, leg F in the daily, 95 yesterday, Friday, 95 open. That's another reason why I liked it as a potential short. Didn't short it though. 95, 97.28 high. Today's high is 97.14. That's that 2-bar reversal. Man, I tell you. And leg F, still leg F. Is that a peak F? Oh, it could be a peak F in the weekly, and leg E in the monthly. There are so many stocks that are beginning to look so vulnerable. The Dow's down 35 at 16,434. The S&P's down 4 at 1827. The comp index is down 20 at 4,111. The gold is up 240. There was some kind of a pullback in gold earlier on. It's at 1241. The silver is up 2 cents at 20.23. Platinum's up 395 at 1416. High-grade copper is now down at 334. It's down 85 cents. Crude oil is up just a little bit at 94.02. Bonds are up 30 seconds at 129.04. Dollar is down 16 at 80.79. Euro is up 0.05. And I wanted to mention that I was asked about CPST. Capstone, I think it is Capstone. CPST. CPST in the den. It's trading at $1.43. I suspect it's going to go to 146. It's up 4 cents right now. At 146, it starts leg C in the weekly. It starts leg C in the weekly and the monthly over 152. My target is between 148 and 152 in this particular move right now, this week. That's the way it looks. The daily is in leg C. These little Capstone turbine, these little nothing stocks, a lot of them are starting to have some really nice percentage gains. This might be one of those. And I'm looking at this and I'm saying, okay, so we're rotating. We're just going through the motion here because so many stocks are looking vulnerable, but there are just a handful that are showing some kind of strength. And that strength, I think, is quite important at this particular time. How the weight of the majority, let me just show you this. So Capstone, that's what I'm anticipating, and great support at 1.35 to 1.32. My suspicion is it'll go to 146 before it touches 137. Now let's look at another one that I was asked about, and that is also in the den, SCTY, Solar City. this is fascinating. It needed to go above 65.30 in the weekly chart to start leg D. It needed to go above that level to start leg D in the monthly. It needed, in the left side, right side price time match, it needed to break into the 65.30 area to be able to test the left side high of PG at 65.30 on the 4th of November. It did that today. It gapped up into leg E. The MACD is good, stochastic's good. It's up 4.64 at 63.91. Where this closes and what it does over the next two sessions is going to be very important. Why? Because if it takes out the high of Friday of 61.20 at any point this week, then it's done for this particular phase. Dow's down 62, S&P's down 7. Most importantly, what I'm looking at here is the volatility index, the VIX, is trading at 13.87. It's only up 11 cents, up 0.80. To really garner upside energy, the volatility index needs to break 1465. It really needs to get into the 15s. 1455 is a 200-period exponential moving average. It needs to get into the 15s because if it does that, it goes above the 1459 high of last week in the weekly chart. And then all of a sudden, the wick of this candle right here, the wick of the 20th of December with a high of 16.75 and a low of 12.89 and an open of 15.64, that area between 1564 and the mid-16s, that is going to be so important. So, looking at this market askance, not trying to overthink it, because there's some factor here that is really important. And that is, until there is a flurry of bad news, and the bad news begins to accelerate in time, in other words, bad news comes out maybe twice in 1 month, all of a sudden could be high interest rates, could be that the Fed is not sure, it could be anything, who knows. But then all of a sudden, you want to start seeing that if you are a bear, you want to see that flurry, you want to see that sparsity turn into a flurry, then go every couple of times a week, and then all of a sudden every day. And that's where you start to see the VIX really scream up into the 19s or higher. At this particular point, it's just another day in a wonderland here in the volatility index. It's only up a tad, 0.08 now. And there's still too much disbelief. The other area of disbelief is, in fact, right there. The other area of disbelief is that the TRIN index has just been doing nothing for months. Nothing. So the sell-off from a peak G in the Dow, oh, that's interesting. The diamonds peak F in the 120-minute chart. So, sorry, that's the 120-minute chart. This could turn into a peak F top in the Dow and the S&P. We'll be back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So the Qs trading at 86.07, down 57. That's a peak E in the Chapman wave methodology, right there with a silent doji the day before. And the stochastic's now under 80% for the first time in a long time. And it's at 79.69, and the MACD crossed negative. But it is really the weekly chart. If that is a peak F top that I'm looking at, F for Frank, all I can say is a close below 85. It's only a point away from your point and 3 cents. A close below that would be the first close underneath the 9-period exponential moving average since way back in the week of the 28th of June, where it was at 69.15. So that would be very significant. And then we're going to see the monthly chart. Now, I have to talk about the monthly charts here. Why? Because the monthly chart says that in the Dow, there's an alternate wave count that could also be called the peak F. I was just trying to give it the benefit of the doubt because the stochastic, remember back in the 93% area, that's usually very good. But the quicker that breaks down and goes into the low 80% area in the stochastic, I've got to watch that MACD's fast-moving average, because what's going to happen is there'll be a pullback, and then there'll be a retracement rally, but it might not make it back to the high of 16,588. That's number one. Number two is the doji candle in the weekly chart. To me, that is so important. You know how I love certain candles? Well, the doji candle is either a reversal candle, or a continuation, a halfway marker. If it's it's a halfway marker, that'll be amazing, because we would need to close somewhere in the 16,600s, and that'll say, okay, you're going straight to the resistance level of 16,700 to 800 in the inside track Chapman wave, dashed line at the top here, weekly chart, and the monthly takes you to the 16,800s. I don't think so. I just absolutely limited upside right now. That's what I believe. And it's how the downside is going to unfold. So now let's do this. So the weekly chart says lower high, and we've made a lower low than last week. It's, hey, first 2 hours, not even the first hour, no, just about first 2 hours. You don't want to jump to conclusions because there's an entire week's trading to go. But in the meantime, this is not very pretty. And the monthly chart says there is going to be a peak D in the monthly if throughout the entire January month the Dow does not go to 16,588.26. Okay. Let's look at the S&P, SPX.X. So when I'm putting this all together with weekly charts and monthly charts, as I spent the entire weekend trying to do, I've got the peak F top potential in the weekly chart of the S&P. Absolutely, if the S&P does not break 1849.44 in the entire month of January, it's made a peak D. And we've seen our peak Ds could be quite significant. Now, the alternative count that I've got here is F/B, and I'm going to keep it that way just for the moment in the S&P. F/B. Always, where it's necessary, we need to keep parallel wave counts. And the IWM. The IWM, whoa, big turnaround today. Peak D in the daily, possibly peak, possibly peak F in the weekly, peak E in the monthly. I have to tell you something. This is the first time, and I've been talking about this now for a couple of weeks. This is the first time, and I've spent a lot of time for my subscribers showing them the weekly and monthly charts and discussing it. That was sent out this morning. This is the first time that I'm beginning to see something that I've not seen before, and that is that the monthly charts are all suggesting not the degree of decline that's potentially coming up. It's suggesting for the first time that this could be where a deeper slide starts. It doesn't say where to. I have other techniques that will do that. And therefore, that's such an interesting question. I have a question in the den. Basil, why are you not short in a big way? Why? I tell you why. You see what's going on in the Dow all the way through the session this morning? You see how the Dow keeps climbing and then it fails and goes to a lower low? The fact that the Citibank and Bank of America, which we own, has done really well. The fact that we have some other stocks that are doing very nicely, and one stock that we took very nice profits in today, just said to me that maybe today's a day that you might just have to give up. I'll be back. I'll talk about it.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
2014 has arrived, and Tom O'Brien has put together a special webinar for his subscribers to his daily newsletter, Market Insights. That will be taking place the evening of Tuesday, January 7th from 6:30 till 7:30 p.m. All you have to do to attend this live event, which will be archived, is to be a subscriber to Tom's daily trading newsletter on the day of the webinar. Tom will be breaking down the three most important sectors that will shape the markets in 2014, the S&P, bonds, and real estate. Tom will provide his subscribers with a technical and fundamental take on these three sectors and how they can shape the entire market outlook for the upcoming year. For a limited time, we're extending a free trial to Tom's daily newsletter to a full 30 days. And even if you had the free trial previously, you're welcome to sign up and take advantage of this special offer, only good till January the 7th. Don't let another year pass you by. Sign up for your 30-day trial to Market Insights today and gain access to this exciting live webinar with Tom O'Brien. Visit the front page of TFNN.com today.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. I'm just doing something I thought I'd do real quick. I saw the ticker go by, grabbed it, and let's just see. Okay, so what we have here is, excuse me. So this is fascinating because a lot of work that I did over the weekend said the monthly charts are beginning to show for one of the first times in a very long time that the instant restart, Chapman Wave Instant Restart, is a formidable tool, and that it has been successful in identifying tops in many of the stocks. And as a result, let me just check this, 121.68, 121, there it is, 120, okay. So even just choosing this one that I saw go by, Howard Hughes Corporation, peak D in the monthly, making a high-level consolidation, working very hard, A, B, C, D, E, ups, A, B, let me just show you this very quickly. It goes on and on and on. How many charts I did this with, and each one says that the monthly and weekly charts are just waiting for the dailies to finish because they are almost or they are at tops that we could call them tops of significance. So now the question is A, B, C, and there it is. There's your D. Oh, this is so frustrating. I hope to get it fixed today. I would have tried this morning, but wanted to make sure I had my charts all ready to work during the show. Okay, so what we're looking at here, this is Howard Hughes, and it's saying it's really close to a pretty sharp pullback, HHC. Now, the question is, why didn't I? Because I couldn't tell you how many times on a Sunday, Saturday, Sunday, I've gone through charts, just, hundreds of charts. But by the time you're all ready and Monday comes around, your head is so full of all this stuff that even if you had all the screens and filters in the world, it's just overwhelming. And what I found is that very seldom do I take new stocks to buy or short on a Monday if I haven't got absolute clarity. In other words, if I'm overwhelmed. And in this particular instance, I was overwhelmed by the negativity in so many sectors. Let me just show you something here. So the question is, why didn't I go short right at the opening? Well, we're about to go short if certain things happen in another couple of minutes, but at the same time, I needed just to give it that little bit of room. Look, SOXS is what I wrote down. What is that? That is the 200% short or something like that. Direction Daily Semicon Bear 3 times short was on my list. Why? Because the SMHs and gap down from the 42 to peak F potential top in the weekly. Made a potential peak E time match. Look at that. Beautiful. Left side, right side. Look at that. Look at that. Going all the way back to 2003. So when I'm starting to get all these things lined up, I feel that I do want to time it exactly. It would have been great to time it exactly this morning. But once you get the trend, that's your friend. And we're going to see, because the day is still young, we'll see exactly how this pans out. Now, why is that where they are? So that's just in short. It's the ProShares Ultra VIX. The IWM is down. And the volatility index, based on this, is down. It should be up huge. So that's the reason. So the answer was, I was seeing residual strength. And what I said to my subscribers, it isn't really internal strength. It's what I call residual strength. In other words, the trend to be changing, but there was just enough strength in some areas that made it worthwhile waiting. That's basically it. Okay. Now we've got the volatility index is up, but it should really be testing the 1450. It's not. So yeah, let's go again. I looked at the XLE. This is the energy sector. Look at that. Peak E top. That's an F top in the weekly chart. F top in the monthly chart. I looked at Dow, DOW. This is not the Dow. This is Dow Chemical. Peak F top in the daily. Peak D in the weekly. Peak D in the monthly. I looked at Priceline. I've been discussing this for I don't know how long. Priceline, peak F top in the daily, triple top. Peak F top, double triple top in the weekly. And a peak D top in the monthly. Down $1.08 at 11.31, but it's already had a spectacular move from the 11.90. Wait a minute, is this the one that made a round number high recently? So that's 11.96, 11.98.75, 11.98.75 that should be. Pulling back very sharp. Oh, it's Google. And it went all the way down to 11.13. That's 83 points. Doesn't do that very often. Priceline. Look at Google. Google made a round number, 11.21, round number high. It's down. It's at 11.09. Oh, it's actually not bad. It's not too bad. Not too bad, but it's F in the daily, D in the weekly. So I'm looking at this and I'm saying there is some kind of strength that I'm looking at in certain areas and a lot of weakness. Look at the RTH. That's going to be the... Oh, look at that. And they used to have a short market vectors retail ETF is the RTH. They used to have a short, a 200% short. No, they took it off because it was just going higher and higher and higher. Well, it hasn't broken down yet, but I'm going to be watching this like a hawk. Why? Because if the RTH breaks down, closes under 59, it's at 60.13. At any point, That'll be the first break into the target of 56.69. 9-period exponential. Zito says, thanks, Basil. I will clarify. Oh, I didn't ask why you aren't short big, implying you ought to be. Just rather ask why not short big, given all the Chapman Wave peak D's, E's, and F's. You explained your thinking well. Thank you for the elaboration. Yeah. So, in other words, even now the Dow's trying to come back. Even the S&P's trying to come back. This is a rotational market. I felt I just didn't want to get trapped in going short and confusing my mind because I wanted clarity. Now I can see sector-wise, we know the sectors that are the weakest. We're also looking at some of the sectors like the XLF, right here, XLF. Why is this not working? XLF. In leg C, I don't know how to count that any other way. I've got leg C and leg D in the weekly and leg E in the monthly. So it's just a matter of time. Just trying to wait for that to conclude. So that's all I can say. So there'll be plenty of time. If this is going to be a pullback of many hundred points, there's plenty of time to go short. There are a couple of others. Look at Costco. I'm a little concerned about Costco. Costco testing the left side low. Made a peak G doji high at 126.12 in the weekly. Peak F at 2 times 126.12 in the daily. And a peak F this is a hat-trick top for Costco. If Costco is making a hat-trick top, meaning price and time to the downside, because it's an F in the Chapman Wave, the 6th highest peak, and you get in the dreaded H in the weekly, a decisive closer below 115.85. It's trading at $116.13, $1.16. That'll say, ooh, be careful. We could be looking at many, many weeks, couple of months, in fact, of some of the retail sector pulling back quite sharply. Look at this Whole Foods market. My favorite short that I haven't shorted. Unbelievable. I spoke about the hat-trick top in the weekly chart, up above the trend line resistance. WFM trading at 54.24, having made an all-time high of 65.59, but that's post-split, so it's actually double that. Minus 2.04, down 3.6%. Broke the 200-period exponential moving average, broke the H pattern in the weekly. I wouldn't have got it. I wanted to short it. I just had a feeling it would gap down, and that gap down just... I didn't want to short a gap down in Whole Foods because if it held the left side low, 54.87, could have had a pretty nice bounce. eBay in the den question. eBay, yes. I looked at eBay earlier on. Peak C, but that's a peak C way below the previous high. It's a peak D in the monthly, and I didn't quite, of course I've done this 1,000 times, a peak G in the weekly. So it's just a series of lower highs and lower lows. I didn't really see it as a short per se. I saw it as being weak, that's all. So that's that one there. So let's just get a little summary here, because this is really the beginning of the beginning of the season, beginning of the year. It is the beginning of the week, and it is the beginning of a potential. Well, we've got a new Fed chair lady coming in today. Now, I wanted to talk just a moment about Janet Yellen. She speaks in this monotone, this I wouldn't say Fed speak monotone, but that's not really true. They don't all do that. But it's like Abby Joseph Cohen. It's this kind of very flat way of just giving out the facts. Over and over and over, you get the facts. So it's a different style to Bernanke, and it's going to be very interesting. And all I can say is, I think she's got her work cut out for her if you're looking at the full term. And I would not be surprised if by the end of this particular term, when it's not even fully closed out, she's going to turn around and say to herself, "What was I thinking?" Well, it's a tough job. I don't know how anybody would want it. So, okay, a couple of things here that I wanted to do, and very important as far as I'm concerned. Look at the IYT, which is the this is the peak D being made right now as we speak in the weekly chart. Peak D possibly 2-bar reversal in the monthly chart, and in the peak G possibly in the daily chart, but so far, the MACD and stochastic in the weekly charts and the monthly charts are really good. And when I looked at that, I said, hey, I don't want to jump the gun. Look at the XAL. This is the airline industry. There's a potential F in the monthly chart. Now, F with a wide-legged doji candle says, got to watch that closely because it could recycle. That's number one. Because that candle is like a moth to a light. That little red candle right there. You can go below and you can go above, but you'll keep coming back, at least for a little while, to the closing price of around about 69.75. It's trading at 71.39 right now, minus 74 cents. And that weekly chart, peak E, so yeah, you could go to an F, but the candle makeup right here says there's a U pattern forming. Just be real careful. And that spike and give back from the other day, going to 73.59, peak E in the daily chart on the 9th of December, with an inside A, B, a potential buy mode unfolding. Says just be real careful with the airlines at this particular point. They've had a fantastic, almost all of them have had fantastic moves. I'm not saying it's all over for them. I am saying just be a little careful watching what happens over the coming week. Then, I had a question in the den that I thought was a good question. Let me just see where it is. It wasn't a question. It was a question about Apple. So let me just show you something with Apple. Apple has made a peak F in the daily, a peak D in the weekly. Now let me just explain for those who are new to my work. These are where the fourth highest peak from the most obvious lowest low bar buy signal going to a buy mode is where you can expect, doesn't have to be, it could go higher, but D is usually where you want to take some kind of precaution. There's a Chapman wave song, fourth verse goes, the wave goes to A and then to B, even the anticipated C and D. That's when it flashes a cautionary light, but all you gotta do is make your stops real tight. Well, you don't have to sing it, but that's just the song. And that's D. And we've got the D, and now you can see it's taking its time. Look at the last D, Doji D, at 705.07 in Apple, way back in 21st of September. It came plunging down, made that April, that was what year? 2012. Comes down as the weekly chart. 2012 comes to the April low in 2013, 385. I think that's where Larry gave a great signal. I believe that was the one. Turns around and has a beautiful rally, goes peak A, B, C, and now it's hanging around at D. It hasn't gone above that. So Apple just needs time. I don't think I think Apple will go higher over the period of this year, but I think it needs consolidating. I'll be right back. We're with Pete in Melbourne, Florida.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, folks, so you've got Zynga's up 4.35, up at 86.23. Boeing's up 47 cents. You've got, where was that other one there I saw? Not too many. Bank of America's up 19 cents, and the ones that are up, and Ford is up 7 cents, and AZO is up 6. Hey, not bad. All right, let's go to Pete in Melbourne, Florida. Hi, Pete. How are you?
I'm doing well, Basil. How are you?
Very well, thank you.
Hey, the reason for the call is recently. Actually, I work for GE, but we can trade the stock in and out several times a year. Recently, sold the stock and looking for an entry point back in on the stock. I wanted to get your opinion on it.
Okay, so basically what's happened is that we were also in it. We were sold. We've also been in many times. We sold it. I'm not sure why I even got in the other day, although it looked this morning like it was going to do very nicely. It was up at 27.73. But let me just check. Yeah, we're out of it now. So we've been back a little bit of the gain from the other day. You know what? I'm inclined to think that you need a little time with GE. I was disappointed with the 2 candles from Thursday and Friday, and now I'm very disappointed with this candle. I'm suspecting that if what you would like to do is you would like to get in and have a certain time period where you garner the best of GE for that particular phase, and then you're out of it. And if you're out of it and it does something different in that period that you're out, that's okay, because what you want is in the period that you're in it, you want to be in the right trend, and you want to at least be making money. How much? That's another thing altogether, but at least you're with the trend of going up, or if you were short, you'd be with the trend going down. I'm suspecting that GE needs to test the entire 26s. That means it needs to test 26.80. If it fails, then it's going to go down to 26, around about 26.40, 26.44. If it fails that, 2620 is going to be critical. And this is going to be the very big test for GE. But my other way that I'm looking at GE is that if, in fact, it can pull back to between 2620 and 2520 and then start to form some kind of a base, that might coincide with some kind of a consolidation that we're going to be looking at in the market. If it breaks under 25, that's going to say not only is the market more vulnerable, but GE would be more vulnerable. So here's my thinking. I'd stay away from GE right now. I think the upside is limited. I would not be thinking that if it held 27.30, and in fact right now it's trading at 28.20, I'd say, oh, you know what? It's worth holding GE with a fairly tight stop because the bias could be for it finally to try for the 31 area. I think it's going to need a little more time. So if you want my opinion is I stay away from GE a little longer. I'd have two points in mind. One is January the 26th to February the 3rd, somewhere in that time frame as a time sequence, and as a price sequence, unless it starts to climb and go to the 20, and I'll talk about it. If I see GE going to anywhere about 27.80, 28.10, I'll talk about it on air, and then you just call me up and we can relook at it. I think GE needs about 1.5 points, could even be 2 points to consolidate. It needs time. I think it's building a very nice rectangle formation that says in the weekly chart it just needs a few weeks in which to build strength for another big move. And I suspect that sometime in the third month, that's the end of the first quarter to the beginning of the second quarter, GE is finally going to get some traction. It will be going towards 31. So it's just a matter of time. I would hold off for now. Let's speak again maybe later this week or next week, okay?
Great. Thank you very much for your info. I appreciate it.
Thank you very much for calling. Folks, stay tuned for Larry Pesavento. Always a wonderful show with Larry and all those guests here at TFNN. I'll be back tomorrow. And don't forget, my service is the opening call. Check it out. 2 weeks free, front page of TFNN. Have a wonderful day.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.